Hello and welcome to the program. I am Bisi Adibayo. It was a historic trading week at the Nigerian stock markets, which ranked the best overall after advancing by close to 13% due to a low-yield environment in the fixed income market and the positive earnings result posted by listed companies for the first 9 months of the year. The sentiment, which vested the market in 4 trading days, led to a triggered automatic circuit breaker in Thursday's session, shoving the relative strength index beyond 96 points as investors booked profit on Friday. A research analyst, Ebitonye Ate, joins us now to drill down on the trading week and help us make sense of the huge inflows that we saw at the Nigerian equities markets this week. Many thanks for joining us on the program. Now, what a positive week it's actually been for traders and investors at the Nigerian stock market. But give us a clear picture of what is fueling this level of confidence in the market.
Okay, hi. Good afternoon. Hello?
Go ahead, Tony, I can hear you.
Okay, hi. Last week was a very bullish weekend on the NSE. What we saw was pushing it was generally just a zero of liquidity in the financial system at this point, and that liquidity is being pushed to the equities market. So we've been seeing a rally for the past, say, around an average like 2 months now, because of generally ideally, interest rates in the treasury bills market has kind of been going southwards due to the fact that obviously last year there was an OMO ban that non-banking financial institutions couldn't buy OMOs. So obviously that moved a lot of pressure and demand into the treasury bill market. And there was also an auction on Wednesday, and the results came out, and the one-year paper was around 0.3%. So that's very low. That's very low yield. And then that just kind of like accumulated, and then a lot of the funds have just been moving into the equity market. So that's what generally we saw. We just saw that rally, and then obviously it was boosted by some good results from the previous week. Some industrial goods sectors released some good results, and some banking sector results are not yet out as well. But people are just anticipating that obviously just that liquidity is going to move, because what we know is that ideally the stocks are undervalued. For some stocks, for some fundamentally sound stocks, undervalued. It's a lot of funds that are just kind of relatively moving into the equities market, because obviously 0.3% is not going to do asset managers any favors at this point. So the equity market has been undervalued, and we haven't been investing in it. So at this point, a lot of those flows are just moving into those equity markets. And what we're seeing a lot of maturities from OMOs and treasury bills market. So last week we saw 270 billion coming in. Before the end of the year, we expect another 2 trillion to come in into the money market. So that money is just going to be moving technically at this point into a high risk environment, even though because treasury bills are
All right, I was just going to ask that, besides the low yield fixed income environment, now we've seen several other uncertainties around the macroeconomic environment. We have the exchange rate, the high exchange rate, lower crude oil price, and high inflation. So how exactly are investors squaring up these concerns to sustain their interest in the market?
Okay, so what our view is that obviously by the time the MBS we anticipate that by the time the MBS should release the Q3 results, we'll probably be in a technical recession, because it will be two negative quarters. But this particular market rally is driven by just actual liquidity at this point, because although some corporate earnings have done well, we still have some exchange rate issues that we have not sorted out, and we don't know, there's no certainty on that. Then we also have fact that we expect GDP to obviously be negative again. So generally, this particular rally is just a rally based on demand and supply, just a lot of liquidity that is going into the equities market. It's not like a lot of these stocks that are moving are fundamentally sound at this point. It's just generally a liquidity rally that we're seeing, and an asset switch, because obviously, as we said, yields are going to still go downwards, because there's just a lot of maturities that are going to come into the market. So this particular rally is just a liquidity rally mostly, even though there are some strong earnings that's on those stocks are going up as well.
Now, tell us, who are those really buying these stocks at this point? Is it the domestic investors or their foreign counterparts?
Okay, so from the flows that we're seeing, there's a lot of domestic demand as well because obviously it's moving, and there's a lot of domestic asset managers that are buying funds as well and buying into the equities market. Because if you look at a lot of people that played in the money market for the past year, yields have been low on money market funds. We've seen 2%, 3%. So there's what we call an asset switch, where basically people are switching assets to high risk equities at this point. And then obviously there's also some foreigners because of the ironing window is technically the CBN intervention ironing window has reduced, and we've been hearing about some backlog. So I guess those funds also that are still in the system are also propping up this market.
But now that the discovery of a reliable COVID-19 vaccine by Pfizer and biotech as well as Moderna is giving a sign of hope for some global economic recovery, do you see Nigeria regaining the confidence of these offshore investors again?
I mean, we have some fundamental issues that we are sorting in from fiscal issues, but from what we know, we saw last week. We saw obviously U.S. elections, and we saw on Monday when they announced the Pfizer vaccine. We saw oil go up. Week on week, Brent went up 10% as of Wednesday. Then obviously we saw kind of demand for equities because at this point people are thinking, okay, maybe if there's going to be a vaccine, then obviously people are going to come out more, and then you saw like drop in some tech stocks because obviously the valuations have been affected. So yeah, we definitely believe that there obviously needs to be some reform, but as we have seen like one or two reforms due to COVID, there's obviously more that needs to be done. But from what we understand from the market, yeah, if oil prices go up, I guess that will regain our, because what is happening now technically is like CBN is just obviously like I guess buying time with the forex. So yeah, we definitely think that like the investor confidence can be regained if obviously the vaccine is effective and then there's more flows and oil prices go up because there's more demand globally for oil. So yeah, that will affect the budget, that will affect fiscal spending, and obviously it will obviously help the markets as well because as we said, even as there's this market rally, the market is still technically undervalued because there's
Now,
still
apart
some sound stocks.
Okay, apart from oil prices that you've talked about now, are there any other external factors that you probably see reshaping foreign portfolio investments this quarter?
Yeah, obviously, you always have to look at what's happening in obviously developed markets and in other emerging markets and how those are doing. Obviously, if I mean, we're not going to see it in the US this year, but like 2 years ago when we saw that yields were increased in the US, then a lot of money just went out. So those kind of things affect kind of like the global financial space. If there's obviously a higher yield environment, which has safer assets as well, obviously that money will move out of Nigeria. But yeah, at this point, obviously, US is still trying to get back to its growth recovery. I know we saw UK last week as well, kind of came out of recession and was good growth. So yeah, I mean, those kind of factors affect the flow of money, and because it's an interconnected financial sector anyway.
Now, when you look at the domestic institutional investors now, they are currently dominant in the equities market. Is it suffice to say that a possible switch between FPIs and these local corporates will keep the market performance intact?
I mean, from what we think in the near term, just due to the fact that obviously yields are very low in risk-free assets, and the market, as we said, is still undervalued. And still, if you look at the dividend yield of the market, average is about six point something percent, and then if you compare that to the yield if you compare that to the yield in other asset class like bonds are doing 4% on the average, and then you have treasury bills. As we said, the last 1 year paper is 0.3. So we still think that the market rally can still be sustained because there's still liquidity coming in. If you look at some of the kind of institutional investors that we know about, we still obviously they have their like quota to how much they can ceiling to how much they can invest, and still haven't reached that. So we can still expect that more money can come into the equity space. Yes.
Now, let me draw your attention to the recently released domestic and foreign investments reports by the NSE, showing that domestic transactions accounted for about 70.33% of the total transactions, and foreign transactions accounted for 29.67% of the total transactions that we saw in September. Shouldn't we actually be worried about the fact that foreign investors appear to be shying away from Nigerian stocks?
No, at this current moment. No, I don't think that should be a worry at this moment, because obviously, like as we said, it's kind of like everywhere generally due to COVID is generally a high risk environment. So I think, like as we said, we're talking about these reforms, and then if you get them right, basically the market will still move. So at this point, there's still some sound stocks in the market. I don't think that particular report at this moment should be a worry.
So at what point do you see the fixed income market regaining traction?
Okay, so yeah, we're looking at this, and we still know that there's still a lot of maturities to come in this year. As we said, we still have 2 trillion when you compare OMOs and T-bills, and then there's a lot of there's around another 2 trillion to come in Q1 next year. So we're basically looking at the market, and then we expect that at the MPC next week, on 24th, 25th, we expect the CBN to probably maybe even take another cut, or even if they leave it like that as well. If they leave it at the current levels, we still expect them, because obviously at this point now what we're looking at is growth, because the MBS report to come out soon, and we expect CBN to look towards growth. So we expect the CBN sometime next year, maybe Q2 for the market, for the fixed income market, to come back to attractive levels, but we still don't see that the old 17 and 16 that we were seeing a couple of years ago.
And with average yields and stop rates hovering around 0.1% now, what could be the worst that can happen to the debt market in terms of return on investments?
Well, so obviously at this point, as we said, it's a demand and supply situation that's obviously putting downward pressure on the market. And we expected the yields to go down at the last auction, and if the liquidity situation continues, we expect yields to go further down. So what obviously you're seeing in the debt market is obviously people are getting negative real returns, because inflation is still kind of at 13.7. So obviously it's why we are seeing a lot of people make their asset switch to make real returns on their money, on their investments.
All right, now let's do a bit of comparison now. The equities market, we saw a negative performance in the first quarter of the year. The all-share index posted a quarterly return of minus 20.65%. But now the market has so far gained 31.67% as at November the 12th. What is your projection for the fourth quarter?
As we said, we expect the markets to remain bullish, because a lot of funds have not come into the market that can still come into the market. Like PFAs have a ceiling out of their 10 trillion allocations, and obviously they can still improve that. And obviously, that during the end of the year, or most years, the market rallies in December, and there's actually a reason for that. So generally, as I said, we expect the market in Q4 to continue to rally, although there'll be some profit taking, as we saw last Friday. We saw obviously the market lost after gaining for basically the whole week, but we still think that the market will be bullish because we don't expect the interest rate environment to change in the short term. So obviously we still expect the market to be bullish for Q4.
How about the coming week? Are we likely to see the profit taking extend to the coming week?
Yeah, we expect some profit taking this week, but we still expect that more people will still come, because there's a lot of demand for stocks. So but we still feel the momentum will be sustained going into the next quarter.
Now, a lot of the stocks now are similarly in their overbought region as this week's markets close. But what are your projections for such stocks next week?
Okay, so I mean, that's looking at the technical analysis of the stocks. As I said, that's more for trading, but for just on a research perspective, we still feel that there are some stocks that are still fundamentally sound, and they still pay a good dividend if you annualize those dividends. So we still think that some investors will be looking to come and pick up those stocks and hold them to at least match. Relatively. So there'll still be some strong hold for those stocks, because they're going to pay dividend cash flows, and obviously they're still fundamentally sound, and we still feel that when just looking at our valuation levels for the stocks, they can still go further, and there's a lot of liquidity in the market to drive it to those prices. So for the stocks that we recommend on our weekly reports and on our website, we still think that those stocks, you can still keep them, and you still there's room for capital gain and there's room for dividend payout.
At what point do you see some price correction, and in what sector? I mean, given that the equity cap is now at 18.3 trillion naira and the index reading at 35,000 psychological position.
Okay, so as I said, we still expect the market to rally in Q4, and our projection for this kind of rally is potentially get to around 40,000 points. So though, as we said, there will be some profit taking, but maybe we're looking at Q1, maybe obviously when there's dividend payout and then general price appreciation. But in the short term, in the near term, we still feel the market is fundamentally undervalued. That's the first reason. The second reason is that if you want to analyze dividend payments at average market dividend payout of 6% compared to the other asset classes, we still feel that the market can still kind of go up and appreciate. The index has to be expanded.
Late last night, President Buhari assented to the Banking and Other Financial Institutions Act, BOFIA. Can that be taken as a form of catalyst for more investors' confidence in the market?
Yeah, I mean, generally, amendments to the legislation like that should obviously boost investor confidence in the market in the long term. But at this point, what we're looking at is just this rally and short-term movement of the market. So definitely that will obviously expand long-term confidence in our market, as some of the other decisions have been taken by the FGN during the COVID outbreak. Will obviously bring more investment into some other sectors.
Well, we're expecting inflation data to be released sometime next week. And when you put that coupled with the new petrol pump price hike, what do these factors tell you about the economic outlook for the rest of the year?
Okay, so as we said, we believe that the economic outlook would still be sluggish. Just COVID-related issues like inflation, exchange rates, and then obviously it's new pump price as well, and that's obviously going to affect the food basket or the consumer basket of standard average Nigerian. But we expect that if those prices can, if those pressures can be controlled, then obviously we see a downside in inflation at some point next year. Or obviously going into Q4, we expect that there's going to be rising inflation, and there's obviously going to be GDP result. We don't expect it to be positive, but it could surprise us.
Well, still talking about the economic outlook now, of course, the efforts are in top gear about the 2021 budget, but what does that tell you about the economic outlook for 2021?
We obviously know that this year there was the budget, and obviously the budget is benchmarked on oil prices, and then we saw that obviously had to be revised due to the fact that oil prices went down. So this year I think the benchmark's around 48, and I think the EIA and OPEC, obviously that's kind of their price range for oil prices. But obviously if there's a vaccine, and if it's going to be effective, then we'll obviously see higher demand for kind of manufacturing activity uptake. We're seeing like uptake in Japan, we're seeing uptake in China, manufacturing activity, and those countries, especially in that region, kind of like import a lot of crude. So if there's a vaccine and how quickly the vaccine can be distributed, then our budget looks a bit more healthy than it would have been in Q1 this year if those global factors. And obviously there's also the election of Biden as well, because what we saw with Trump trade war was that he affected oil demand, and obviously oil prices were affected for a while. There's also the Iran deal as well. There's other geopolitical factors with Libya and other countries. So those obviously affect our main exports. So if those can be sustained or taken care of, and it's looking positive for the oil market just in the past 2 weeks. But obviously we look at these things kind of on a longer term basis.
Ibitoye Ate, many thanks for speaking with us on the program, and do enjoy the rest of your weekend.
Okay, thank you.
Let's take some company news now, beginning with Seplat Petroleum Development Company, which has announced the payment of interim dividend for the third quarter of 2020. In a statement sent to the Nigerian Stock Exchange, the dual-listed energy company confirmed that in line with the currency exchange rate, it's proposing 385 naira 78 kobo equivalent to $1. The closing date for the dividend currency election to the company's registrar is November the 28th, 2020. Meanwhile, Seplat hints that in the absence of a qualifying dividend currency election by shareholders to the appropriate registrar, dividends will be paid in their default currency. And Access Bank has confirmed the appointment of Mr. Seyi Kumakpayi as Executive Director, African Subsidiaries, and Mrs. Omoshalewa Fajabi as Non-Executive Director. Before his appointment, Mr. Kumakpayi had been the Group Chief Financial Officer of Access Bank since 2008. He also worked with other financial institutions such as First City Monument Bank Limited and Guarantee Trust Bank. On the other hand, Mrs. Omoshalewa Fajabi has worked in various sectors such as the financial investment and legal services industry. Before her appointment, Mrs. Fajabi worked as the legal counsel at the defunct Oceanic Bank between 2006 and 2010 and at Access Bank from 2004 to 2006. She is currently an operating director at Tenjin Family Office Limited. Well, staying with company news, the small cap brewer Champion Breweries has posted mostly lackluster performance in its 9 months earnings result, although the company reported a higher revenue of 4.89 billion naira against the 4.81 billion naira reported the same period last year. Its gross profit came in lower at 1.57 billion naira against 1.7 billion naira within the comparative period. Similarly, the brewer's pre-tax profit was a dismal 85.2 million naira compared to the previous 406.5 billion naira. After-tax profit was lower at 59.67 million naira in contrast to last year's 284.4 million naira, while its earning per share was an unimpressive 76 kobo against the 363 kobo reported last year. And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.